Good morning and welcome back to Almus Market Mornings. President Trump and energy prices have a sensitive relationship. You see, just like in India, the larger voting class is worried about prices of certain food items. In US, it's often people are very sensitive about gas prices. Now, since the war broke out, there has been a significant rise in prices, and this has resulted in US allowing India, which is also the third largest consumer of oil in the world, to go back to purchasing Russian oil. This is, of course, a temporary measure, but almost 9 million barrels of Russian oil are floating in vessels in Asia, and this becomes available for India to purchase. Good morning, JK. As one of the energy analysts I follow said, seems like an energy taco. Your thoughts?
Good morning, Swaraj. I think some of these measures had to come because the global energy sector has been our energy supplies, and in fact, the economic activity at the global level is likely getting affected because of the conflict in which US is directly involved, and that is where these interim decisions are happening. A day back. Trump had announced that US will provide the financial insurance for ships sailing through Strait of Hormuz. Also, they will be escorted by US Navy ships, and that, of course, is not going to be very effective because the ships can still refuse to move, and the insurance companies might still be charging exorbitant amount, or they may not be ready to insure as well. So that is one of the measures. Then, of course, the measure now to allow India to buy Russian oil for 30 days is, of course, a relief for India because already global supply chains are getting affected. And, the Indian reserves are reportedly only for 25 days of demand. And that's a very critical position to be in. Hence, this comes as some relief, no doubt. Hopefully, the war also, does not extend beyond the period of 1 month. But as I shared yesterday, even when Russia is offering to fulfill the supply shortages for India, the prices now come at the current global prices, and now, in fact, the Indian buyers are offering a premium of $4 to $5 per barrel on, the oil supplied, and this is comparable to a discount of $13, which was available in early February, till early February. So I think we are not in a bargaining position now, and we have to take whatever comes our way because we are now dependent upon the global events, and hopefully these events are, coming to some sort of a better situation very soon. Definitely, a prolonged conflict is going to be a real headache for India because it is estimated that every $10 rise in the price of oil is going to increase our current account deficit by about 40 to 50 basis points as well. Now, even the LNG supply is also another challenge that India is facing because Qatar has halted production at a number of LNG plants, and they've also, in fact, resorted to the force majeure clause, due to which they say they are unable to meet even certain contractual commitments due to events beyond control. And the government in India is considering prioritizing supply to the domestic users first. So I think we are facing a big challenge of supply shortage, higher crude prices, and eventually higher inflation. And this, if this situation continues, there will be several impacts on the domestic macro apart from the current account deficit widening. Economic activity will get affected, and even the growth will take a hit. And at the same time, if the growth is affected because of higher inflation, possibilities of another rate cut by RBI also will take, we will be reduced considerably. So we are in a very challenged situation currently. On the global side, markets had a very volatile day yesterday. Markets started off on a good note with the recovery, and in a lot of rumors which have been influencing the markets as well. There was a second time there was a rumor yesterday that Iran is ready for talks on the nuclear facilities, but that eventually proved to be a false rumor, and all the markets entirely reversed. We saw the oil hit a new high after the rumors were denied, and we saw 82 being traded in WTI, and the Brent also hit about $86 dollars per barrel. Indian markets were also very volatile. We had RBI intervening right in the opening hours of the market and brought down the rate to 91.40, but that was very much unsustainable because the global situation has already changed, and importers are very happy to get these dips to cover themselves. And despite the USD INR trading at a high level and the forward premium being attractive, exporters are still keeping away because the situation is so uncertain. We are talking of supply chain issues for imports to India. There are also issues for Indian exporters to see their ships sail to, particularly to some of the Middle East countries. Rice export is one of them. So I think we are facing challenges from many sides, both from the import side as well as in the export side. In this circumstance, it is very difficult to see the rupee sustaining any gains. Pressure on rupee will sustain, but definitely RBI with their headline reserves now well above 700, and most of their liabilities well after 1 year maturity for the forward. I think they are in a position to use a good amount of reserves to contain any undue volatility in the rupee, but the direction of the rupee is still not changing. That is really very clear. On the global side, we have had the US market once again tumbling, particularly the Dow, but Nasdaq was relatively better off, although it was also in the negative side. Asian markets are somewhat negative today, not as much as the previous day, and now we await the economic news on the US non-farm payroll tonight. There was some more indication that the numbers could be better because the Challenger report showed the number of job losses or the job cuts were much less compared to the last month. And so that was some better news. But then if we look at the overall trend in the job cuts for right from 2023 onwards, it has been increasing every year. In the year 2025, as many as 1.2 million jobs were cut, and for 2023, for example, it was only around 700,000. And also, if you look at the hiring plans from the US corporate, they are down 63%. In February, from February 2025, and this year they have announced to hire another 56% lower, for the year compared to year 2025. So I think even if the job number or the non-farm payroll number does come better than the 60,000 that is expected, I don't think market is going to see a very big reaction to it. In any case, the geopolitics is the most prominent in the minds of the traders, investors, and the economy managers. So we will keep an eye on the developments in the Middle East, and we are heading into a weekend. So even any good news on the economic front is not going to be acted upon for the time being. Markets will be slightly biased to selling stocks, and perhaps the dollar will continue to keep its safe haven buying intact, and notwithstanding the fact that eventually dollar has its own issues to resolve. Thank you.
Thank you, JK. And yeah, we are almost completing 1 week, 1 week for this particular conflict that's ongoing. As of now, it's showing no signs of subsiding. Yesterday and even day before, I think there were rumors of Iran agreeing for negotiations, but they turned out to be false, and we saw risk assets taking a hit because of that. Energy prices and energy supply is at the forefront because first, the Strait of Hormuz, even though there are security guarantees by the US, ships are unwilling to sail. LNG supply itself is facing a challenge because Qatar has closed down some of its plants. More or less, the entire Middle East is shaken because of the events that has transpired. Uh, Going into Friday today, we have two economic data to look forward to, which is the US NFP and the unemployment rate. Uh, but any good news or any good reaction might be limited because again we are going into a weekend. So how all of that plays out would be on invest. How the geopolitics plays out will be primarily on investors' minds. That's it from Sri. Thanks for listening. Have a great weekend. We will catch up on Monday with a fresh round of updates.
So, Raj, I think we also have no relief on the geopolitical front because President Trump already said that after Iran, Cuba will be on next on his agenda. So, I don't think we can see any.
Any signs of peace?
Yes,
Yes,
yes, yeah,
there you go. I think
yeah,
a US president trying to show the might of
yeah,
US military.
yes, yeah.
And yes, yes. So we have a lot more to look forward to. So more reasons for our listeners to tune into Almus Market Mornings. Thank you. Thanks for listening. We'll catch up on Monday with a fresh round of updates.